What's happening, people? Good morning, America, and welcome everyone to our live stream. We are proud to announce the new daily broadcast streamed live on Facebook, YouTube, and Twitch TV, proudly sponsored by our partners at Forex and Markets.com. Join us every day on your favorite media channel, learn how investments work, win a prize every day, and find out what most Forex brokers don't want you to know. Starting next week, guys, we are launching a new talk show called Show Me the Money, where each and every one of you could win great prizes just by attending our live streams and answering a few simple questions about online trading and investments. Have you ever wondered what would you do if you have the opportunity to have a one-on-one session with a CEO of a famous Forex brokerage or a famous market analyst from London? What would you ask them? Well, wonder no more. Join our daily streams and find out. And to sweeten the deal even more, you could win fantastic prizes every day. iPads, one-on-one mentoring from industry specialists, cash prizes, and much more. You can find all the links in the description down below, guys. Feel free to like, share, subscribe, and support us on your favorite media channel in delivering more great content. Once again, good morning, America. We started the day with the US counting the votes. As things stand right now, it's a tight one. It's going to be a very, very tight one. In his last efforts of winning the electorate, we saw Donald Trump racing yesterday through 5 cities and 4 states. Apparently, that helped him get the majority in Florida, Michigan, Ohio, and another couple of states. If we started the day this morning with signs that Joe Biden will win the elections, now things are too close to call. This morning, Donald Trump was not happy that votes were still being counted after the polls closed, and he threatened to escalate the case to the U.S. Supreme Court. Here's where it gets funny. As votes were piling up in his favor, apparently Donald Trump had a change of heart, but still the race is very, very tight, guys. The world is still awaiting for key state counts, and with a bit of luck, we might have a result at some point tonight. What follows after, only God knows. Extremely busy day in the economic calendar, and the pressure of U.S. elections sent the major currencies and commodities in a fantastic volatility swing, giving great opportunities for investors to scalp the markets and profit from these swings. Let's see how the markets perform, guys. And in a couple of minutes, we're going to have Alex Katsaros in the studio, CEO at TopFX, Tier 1 liquidity provider in the Forex industry. But until then, let's have a quick look at the charts, guys, and see how the markets perform today. We're going to start with crude oil as usual. Crude oil, which is currently trading at 38.54 on a 1-hour chart. We can see the RSI and the stochastic up in the overbought levels. Crude oil is still supported by the 200 moving average. And let's not forget, guys, within 1 hour from now, we're going to have the crude oil inventories, the most awaited announcement of the week after the US elections. Euro USD is currently trading at 117.02. It dropped below the 200 moving average a few hours ago. It's currently heading towards the 50 moving average. We see the RSI and the stochastic turning around, pointing downwards, a bit of selling power on the euro at the US opening. The pound, guys, great swing for the pound in the last 24 hours. Again, it started dropping a few hours ago, just like the euro. Currently trading at 129.66. And again, the RSI and the stochastic at the bottom of the chart are pointing lower. So we might see a bit of a meltdown. USD JPY, on the other hand, is getting ready for the slingshot effect that I keep talking about for the last couple of days. We're looking at the RSI and the stochastic turning around from the oversold sections. And who knows, maybe in a bit of time, we're going to see the USD testing the 200 moving average. And why not moving on top of it once again? The Aussie dollar, just like the European currencies, after a fantastic rally today, started this morning. It started finally dropping as we get closer to the US markets opening. It's currently trading at 0.7133. Nothing wrong with that. It's still trading higher than a couple of days ago. Let's hope that uptrend will continue for the Aussie dollar, but it all has to do with the American dollar. USD CAD, again, just like USD JPY, it suffered a bit of losses today, moved below the 200 moving average. And as things stand right now, we can clearly see the US dollar getting ready for that slingshot effect, with the RSI not being able to come down all the way into the oversold sections and the stochastic at the bottom apparently turning around. We're going to have a quick look at the US dollar. Again, the US dollar has been acting the same against all its peers. Yeah, we can see the US dollar index advancing a bit more than USD Canadian and USD JPY, but still, same scenario. The dollar that dropped today seems to be getting stronger as we get closer to the American opening. Gold, on the other hand, is currently trading at 1908.20. Very, very good rally for gold today. We can still see gold settling higher. Apparently, the candlesticks are consolidating somewhere higher. And again, we might see gold pushing higher. But again, it all has to do with US elections and the US dollar and the US markets opening. Brent oil futures, guys, on a 60-minute chart, just like crude oil futures are trading slightly higher. We see Brent oil trading above the $40 mark. It's currently trading at 40.67. If you look carefully in the right-hand side, we see a gold cross to be formed between the 200 and the 50 moving average. Very, very interesting. We might see oil markets consolidating somewhere higher, guys, in the upcoming days. Silver is currently trading at 24.095, testing the 200 moving average. We see a lower high being created. Let's see what's going to happen shortly after the US Open. And the absolute champion, guys, Bitcoin, which traded at $14,000 this morning, 14,019, is now heading towards the 50 moving average. It's currently trading at 13,771. It might test the 50 or the 200 moving average, dropping to 13,513. We're somewhere in that region. A bit of weakness. We look at the RSI and the stochastic. We don't get much from it. We see the RSI turning around, which indicates a bit of selling power. Stochastic is pointing upwards, so that's a bit of divergence between indicators. But don't worry, guys. Bitcoin, as we know, is more driven by your actions than the markets, as Bitcoin and cryptocurrencies are decentralized. Right. This is what is happening with the markets, guys. In the next 30 seconds, we're going to welcome Alex Katsaros, CEO at TopFX, Tier 1 liquidity provider in the Forex industry. Stay tuned. Right, and we're back, everyone, with Alex Katsaros. Alex, big welcome. Good afternoon. How are you doing?
I'm doing great. Thank you for the invitation. I'm very happy to be here.
Always a pleasure, and thank you for accepting the challenge.
I might accept any challenge you want. I'm fine with challenges.
Right. What a couple of months we had. The markets went all over the place. We saw a lot of pressure on the markets in the past few months. And the COVID pandemic, US elections, Brexit, they all weighted heavily on the currency pairs and commodities all over the world. Now, if a few months ago, they were easier to predict, and long-term trading made sense, in the last couple of months, long-term trading wasn't there, and the most traders got out of the markets was scalping in very, very short-term trades. Today is the big day. We should see the American president. Polls are showing that Joe Biden is leading, but America seems to be under pressure, with Donald Trump almost equaling Joe Biden in the polls. My question is, what do you think the impact on the U.S. economy will be if Joe Biden gets elected versus Donald Trump?
Well, to be honest, no one can know the exact impact on the U.S. economy if either of them gets elected. The big advantage of Donald Trump is supposed to be the economies and how he pushes the stock market, whereas Joe Biden is promising a faster stimulus package.
Yes.
So I think the situation is very, very complicated to just stay here and say that, okay, if Trump is elected, that's going to happen. And if Biden is elected, that's going to happen. I'm talking about the markets now. The markets are fairly unpredictable. What I can definitely promise you is that we're going to have a lot of volatility until the results are announced, because it was supposed to be a more clear victory for Biden, but it doesn't seem to be so. They're very close together, and the closer they are, the more volatile the markets. And also, things are changing a lot. Trump is saying that he's going to do some nasty stuff. He's going to do actions. He's going to do this. He's going to do that. That always has an impact on the markets with volatility. I think the U.S. economy is pretty strong, and I don't think that the stock market is going to go down, or it's not going to go up, no matter who is elected, to be honest, because it's based on strong fundamentals.
The stimulus measures, though, weighed heavily.
Yeah, definitely. And, it depends on how much money is printed always. But, people need to understand, not everybody understands that a stock is also a cross pair. It's versus a currency.
Yeah.
So when you print a lot of currency, the stock goes up because the currency is devaluated. So the more dollars you have in circulation, the more dollars you have to put into the markets, and the more the markets are going to go up. So it doesn't mean that if you print a lot of money, that's bad for the stock market in a value sense. It's bad for other reasons, but definitely it's very complicated.
We saw a lot of volatility happening in the last 48 hours, big swings. And this takes me back. I remember the NFPs that we had 5 years ago, 6 years ago, when it was going like crazy.
Yeah, it's because no one expected to be that close. I mean, most people do not expect to be that close. I didn't expect to be that close. It was supposed to be some more of a clear victory for Biden, but it's extremely close. And the more time passes, the closer it gets. So we can continue to be expecting a lot of volatility. And after the results are announced, again, there's going to be a lot of volatility, especially if Trump keeps on doing what he's doing and starts challenging the election or doing stuff like that. This is uncertainty. No one wants that. Then you have if Biden is elected, we have the stimulus package. He's going to push who's going to push it for it to be very fast. That's going to be good for the markets, but it's a volatile time. At the same time, you have Corona, you have the vaccine,
you have the Brexit, you have everything.
You have Brexit, you have everything at the same time, and it's a volatile time for the markets. That means a lot of opportunities, but also a lot of threats. Traders should be very, very careful.
What would you suggest? What would you recommend for traders that want to trade the elections right now, that want to trade in these volatile times?
They should be vigilant. They should be very careful with the risk management. You cannot use tight stop losses right now because of the volatility. So you're gonna get destroyed. So you have to relax your stop loss a little bit, or you have to try to scalp without a stop loss.
And increase the margins. Yeah, definitely
you have
increase
the margins. You have to use less leverage, most probably. But it depends. I mean, risk management is also a complicated thing. There is no good and bad risk management. Risk management is about a trader knowing exactly what he wants to accomplish and choosing the right tools to accomplish that. I mean, if someone wants to go all in on the markets, on gold, on Euro USD or whatever, he wants to use all of his leverage.
It is a common strategy.
I assure you, it's not just it's a very, very successful strategy for some people. It's a strategy that I won't lie. Us, the brokerage firm, I wouldn't say we're afraid of it, but I would say that it's a risky strategy for the trader and for us at the same time. I mean, when someone can multiply his deposit by 10 times, it's not something that, there is a big chance that he can get stopped out, but there's a real chance for us to lose a lot of money if we take the risk. So it's a very valid strategy. I have nothing against this strategy. Those strategies are good. You do. That's fine. But there are other things that are wrong, like the disposition effect and everything, but I won't go into that. It's not the time for that.
We're going to have a separate webinar for that to teach people how to trade and how to manage.
I can do that, yeah.
Now, in the intro, I mentioned that you are the CEO of liquidity provider, tier 1 liquidity provider in the Forex industry. Let's try and help people understand what is the difference between a Forex brokerage and a liquidity provider.
Sure. A Forex brokerage is where retail traders like you and me and everybody else, not me, I'm a professional, but more retail traders go to trade. However, brokerages, those companies, they also have to trade with someone. That someone is a liquidity provider. So the liquidity provider is a brokerage that brokers
provides liquidity to other brokerages.
Yeah, that's what provides liquidity means. Liquidity is not just a price stream. You don't just send prices. The prices are executable. It means that the brokerage can trade with those prices and they can trade with a liquidity provider. So that's a liquidity provider. It's a company that brokers trade with. There is a second point that makes a liquidity provider different than a retail brokerage is also the tools that the liquidity provider will offer, because our clients are mostly brokerages, and brokerages look for a lot of things when they choose a company. They want liquidity, but they also want platforms, they want CRMs, they want technology, they want advice. They want different options with a liquidity, and they want a lot of things. We provide a package that has all of this stuff, and for that reason, most big liquidity providers like TopFX, we also have proprietary technology. So we have a CRM that is developed in-house. We have a payments aggregator that we provide to them. So I guess that this is a good answer.
And
they understand.
do you guys, as a liquidity provider, do you guys allow retail traders to trade with you? You have that that feature?
We recently started to allow retail traders to trade with us. Up until now, it was only professionals and traders with a lot of capital, so they could be classified as professional traders. But now there is a shift in the industry. Actually, there is the line between a liquidity provider and the retail brokerage. It started to become thinner. You see a lot of retail brokerages trying to get into the liquidity space and try to offer liquidity to other brokerages. And you also see the retail space growing and growing and growing. So it made sense for us, since we've been in the industry for 10 years, we know we've seen the hardest stuff. We've done the most difficult actions to provide the best possible execution. Business-to-business liquidity is a lot more challenging because they know what they're doing, they know what they're requesting. It's not as simple as a retail trader. So it's just a marketing exercise. You have to know your positioning. You have to know what you're going to offer that other brokers don't offer. So it made sense for us, and we're starting to expand in all over the world.
Well, then I'm looking forward to see how that goes for you. Now, last week we saw ASIC issuing a new directive that basically lined up Australian brokerages with ESMA, with the European brokerages, and they drastically dropped the leverage from the 1 to 400 that everyone loves to 1 to 30, 1 to 10, or 1 to 1 on cryptocurrencies. What does that mean for retail traders from your point of view? How big is that hit for retail traders?
It's a very big hit for the traders that choose to trade with brokers regulated in Australia. But in general, traders, we've seen that with ESMA and the rules here. I'll tell you a small story. I mean, not a story, but I'll tell you what happened. Before the ESMA announced those measures with 30 leverage and everything, we were aligned with ESMA. We understood why they did it. We want to protect retail traders. We have nothing against protecting retail traders. And we were like, let's say that we were expecting to see what will happen, as ESMA was expecting to see what will happen. And we saw what happened. And what happened is that retail traders don't really want to be told what to do. They don't like they don't like if someone tells them that you can trade with 30 leverage instead of 100 or 500. So what happened is what it was expected. They flew outside of Europe, and they flew, metaphorically speaking, to offshore jurisdictions. And that's exactly what's going to happen in Australia. There is retail traders don't want to trade with 30 leverage.
That would have been my next question. Will this send retail traders away?
You don't have to solicit them. It's prohibited anyway. You don't have to push them. They will find out themselves. And they will do it. They will leave because that's how it is. So
the Australian regulated brokers basically are kind of losing business right now, because some traders will migrate offshore.
They gained a lot of business when the ESMA measures happened in Europe.
Yeah,
a lot of European traders thought of Australia as a solution because it's a strong country, strong economy, regulated. So now they're going to leave again.
They're going to go again
for somewhere else. Yeah.
Unfortunately, yes. Now, talking about leverage, how much leverage is too much leverage, Alex? Because we see, talking about offshore entities, regulated or unregulated, I see some entities offering up to 1 to 1,000 leverage. What would you say is the top for a trader to actually be successful for the long run?
I would say that I don't like the question. Leverage. No. I will explain why. Leverage is just a tool. Okay. I mean, if you're a good trader, you're probably setting up your stop losses based on your account equity. I mean, you risk a percentage of your account.
Yeah.
So that's completely irrelevant with leverage. You can choose 1,000 or 2,000 or 1,000,000 leverage. If you're risking 1% of your account with each trade, it doesn't have any effect. However, if you're a novice trader, you don't know risk management, you don't know this stuff, and you just try to trade the maximum amount that you can trade possibly, and you really don't know anything about the rest of the stuff, most probably 1,000 leverage is not going to be good for you because you're going to get stopped out really fast and
in 5 minutes.
Yeah, but the thing is that leverage is just a tool. You cannot blame leverage. Why would we blame leverage if a trader doesn't know how to trade? He didn't read anything. He didn't try to learn. He didn't try to use a demo account. He just,
and from the first trade, he is exposing 90% of his trading account.
Yeah, exactly. Why would that be a problem with leverage? Leverage is just a tool. So to answer your question, if someone is using leverage without knowing how to use it, 1,000 is too much. 500 is pretty much also. I would say in order, we have to understand that the CFD is a product that is a leverage instrument for this daily trading and for doing what it's supposed to do. If you make CFD one-to-one, what's the point? You go to the stock market.
You go to the bank basically and you trade cash.
So I would say that 100 leverage is a good point for someone who wants to trade CFDs with not like humongous risk. He can manage the situation, etc.
But that means higher deposits, Alex. And we know people are really, they don't like depositing money.
Yeah, that's a great point. That's the other point of you having higher leverage. It means that you have to deposit less money.
Yeah.
Because if you want, if you can trade, let's say you can trade with 1,000, what you would be trading with 10,000. So you keep your 9,000 in the bank. You have less risk and you sleep easier at night.
You probably pay for keeping your money in the bank because now we see the interest rates very low.
Exactly. So I would say that, again, leverage is a tool. You have to know how to use it. If you know how to use it, there is no amount that is high. It can be anything. If you don't know how to use it, you can stick with 100 or 50 to see how CFDs work. 30, I think it's
very low, man. It's very low for the average, because now I'm talking about the average trader, the person that makes $2,000 a month, $3,000 a month. How much they're going to deposit? $1,000.
Exactly. So it's too low, and traders don't like it because it's also the product, the CFD product loses identity. It loses its place in the world. I mean, what is it? There are choices for you to trade if you want to trade with low leverage. So that's the answer.
Now, thank you for that. Now, we had an absolute champion. Now, we saw recently a lot of currencies going down, a lot of commodities going down. Yeah, we saw the Turkish lira, we saw the Russian ruble. But we had an absolute champion, and the absolute champion is a decentralized one, and is the Bitcoin, which yesterday reached $14,000. Now, I know you know your stuff, and you have a talk show about cryptocurrencies, and you're very knowledgeable. So I will ask you directly, what do you think led to Bitcoin price skyrocketing like this? Is Bitcoin acting more like a safe haven now with all this pressure on the conventional currencies?
I would say that I would not say that it's only one thing that led Bitcoin to be higher. Bitcoin can only go up. That's how it's built. That's how it's made. And it is made like that because it's finite. You cannot print any more of it.
Yeah.
So if you have the specific amount of Bitcoins in circulation, which is not going to go up, and at the same time you have more adoption, more people using it, then there is the only logical thing is for its value to go up because you have more demand and the supply will never change. And we know that it's going to happen. I don't know. I cannot tell you what's going to happen next month or in 6 months or in 1 year. No one knows that. So, but to answer your question, why is this happening now? I would say that it's many reasons. Let's talk about the adoption first, which is something that the average retail trader doesn't understand. You saw, for example, that PayPal started using Bitcoin. This is like huge. This is huge. It's not a joke. And we offer Bitcoin deposits via PayPal and PSPs and whatever. So we see what is happening. We see that people, that clients are using Bitcoin a lot more. And it's growing exponentially. When this is happening, of course, it's going to go up. Then at the same time, you have all this uncertainty in the market. The uncertainty in the market is definitely helping all the safe haven assets. And yeah, I do think that
Bitcoin is becoming a safe haven, is it?
Bitcoin is becoming a safe haven asset.
Because it's decentralized.
Yeah, and for a lot of reasons. One of the reasons being that it's decentralized.
Yes.
And another point is that all this turbulence and what's happening, we're seeing exotic or low-tier currencies getting devaluated very much. So you see what's happening with the
Argentina,
Turkish lira,
for example,
Argentina, Turkish lira. You see what it's going crazy. So Bitcoin is the answer to those
their problem.
If
I remember correctly, sorry to cut you off. Last year, Argentina was talking about launching its own cryptocurrency to save the economy.
Yeah, well, I don't know about that.
How realistic is that?
I would not consider this realistic because we have thousands of altcoins now.
Yeah.
Argentina's coin would be just an altcoin, and it will be backed by the government. Now, if they could make some sort of connection. And for traders all around the world or clients to use it, it would work. But I would just stick to what is working now. I would wait. I mean, imagine that tomorrow you have a coin from Argentina, which is, for me, is one more altcoin.
For them is to save the economy. I mean, to cut all those zeros that they keep adding for years.
Yeah, what I said before is the secret in every cryptocurrency is the adoption. How much people, how much clients and traders and everybody's using it. Not just internally in the country, it has to be adopted all over the world. So if Argentina or whatever country managed to succeed into that, it would be okay. But think a little bit like, if we think about it, the cryptocurrency that Argentina would launch would be
a national currency.
No, it would be exactly the same as a national currency. The fact that you make it digital doesn't mean anything. Doesn't mean that you save the economy because now it's bits and bytes instead of paper. What matters is that what is behind that? What is it that if Argentina is not going well with the fiat currency, it's not going to go well with a digital currency. It's the same thing. So you're not solving the underlying problem. The underlying problem is to fix your economy. It's not to baptize your currency with a different name. So no, I wouldn't think. I wouldn't know. I'm not the expert. It's not like I live in Argentina. I know exactly what's happening. But I would say that it's really difficult, and they have to overcome a lot of obstacles to manage to save the economy with a digital currency.
Right, now back to Bitcoin. I did a bit of technical analysis on the Bitcoin. We can look at it right now. We see the next previous high will be at 17,000.
Yeah.
There is a big gap between where Bitcoin is trading right now, almost at 14,000 and 17,000. We saw Bitcoin rallying almost 2,000 in less than a week and a half. Might we see that jump fairly soon with Bitcoin jumping from 14,000 to 17?
I don't know. No one knows, but I can tell you one thing.
It's in an uptrend.
It's in an uptrend. Yeah, we may see it to 20. We may see it to 100,000. The thing is that in order to kind of understand all this, it's kind of important for someone to understand about some things about blockchain, some basic things like.
I'm going to get to that in a minute. I'm going to get to blockchain in a minute.
But still, okay, are we going to see it happening soon? What I can say is that short-term Bitcoin is very volatile. So yeah, it's possible to see it at 20, at 25, at anything. But it's also possible to see it at 8 or 6.
To go down again.
Yeah, of course. It's very volatile. That's what. But short-term is very volatile. Long-term is not volatile. There is only one way.
It's like a stock, basically.
It's gonna go. No, it's like a good stock. So it's gonna go up because the fundamentals are there. The adoption is there. It's progressing. I don't see any other way.
And Bitcoin's ultimate purpose is to replace fiat currency.
Yeah, I don't know about that. happening anytime soon, but I do know
10 to 20 years from now, probably we're going to see it happening.
I don't think that it's ever going to happen, but this is not...
really?
Yeah, I don't see... you think that governments are going to disappear? And
no, eventually, probably they're going to...
Replace means that you don't have euros anymore, you don't have dollars anymore, you have bitcoins instead. Yes. No, it's not going to happen. But what is definitely going to happen is you're going to have a lot higher percentage of cryptocurrencies being used related to the fiat currencies. Maybe at some point it's going to be 10% of the currency circulation is going to be Bitcoin and other cryptocurrency. Maybe 20, maybe 50%. I don't see that 100 in our lifetimes, to be honest. Maybe at some point past our lifetimes. But it's gonna definitely go higher. It's going to be adopted more. Now, how much more? I don't know. Would I be long on Bitcoin at the moment? Most probably yes, but also you have to be vigilant. It's really volatile. I'm telling you, there is nothing that says that it's not going to be at 8,000 in a month or 2 months or so.
One bad news, and the market drops by $2,000 overnight.
News. Maybe when the economy stabilizes, maybe clients are going to think that, okay, now I can put my money back into the banks and back to the stock markets and back into fiat. However, I think that it's kind of safe at this area of 10,000 because of the adoption thing. The adoption is going to continue. It doesn't matter if the economies go good, if things stabilize, still the adoption is never going to stop.
And you have the millennials, the teenagers, which seem to forget that cash, that fiat currency exists.
That's great.
And they all talk about that.
That's great.
Talking about that, knowing that you know your field so well, can you give us a hint on other coins that are, let's say, more affordable to the public? Do you have any other altcoins in mind apart from Ethereum? and Ripple.
First of all, I don't like the way you ask the question,
Go on.
because it's not like Bitcoin is not affordable. You don't have to buy one Bitcoin. You can buy Satoshis. You can buy 0.000. So that's it. It's a
But
capitalization
going
that
for a
matters.
full coin.
What? Why? What matters is the capitalization. I mean, you can get a small part of the coin. It doesn't matter that because Ripple is cheaper and you get like a bunch of Ripples instead of one Bitcoin, that it's a better investment. It doesn't work like that. But anyway, okay, I got what you're saying, however. And I personally, I would stick to Bitcoin and Ethereum because that's what I like. Ethereum is a great framework for building other cryptocurrencies on it and smart contracts and everything. So they've done an amazing job, and it's 100% sure. Now, if someone wants to take a lot of risk, I wouldn't really recommend going below the top 20 of cryptocurrencies. You know, all the altcoins.
Oh yeah, because they disappear.
They just go poof. But you know, there are good projects. I mean, there is VeChain that I have a friend that likes it very much. There is Ripple, which is they're doing very well, and they're executing their plan pretty well, so they're pretty much secure. You have Monero, which is very interesting because it's a black hole, and it's super secure, and there is nothing alternative. It's the best one of the super secure coins. Cardano is pretty okay, but personally, those are just altcoins that have proven to be doing something. They're proven to be serious. But for an investor who doesn't know much about this stuff and they want to remain, have lower risk, I would say stick to Bitcoin.
Stick to the basics.
Ethereum is good. Maybe Ripple and something like that.
Right. One last question. One last question. How about people investing in cryptos versus trading them as CFDs? Cryptos have been hyped up recently. Is there a downside buying, hodling cryptos versus trading them as CFDs? What are the pros and cons, basically?
I'll tell you. First of all, I would say pretty clearly that I would separate the investor from the trader in this sense. Let's say that someone is really he really believes in what the revolution that's coming from cryptocurrencies and blockchain. He really is ethically part of that revolution, and he really wants to support, which is a great thing. I would support it. I don't see why not. There is no reason for us to have only fiat. I'm not against it, but alternatives are good. They're always good. So if you really want to back this up and to support it, you have to hold. You don't support it with a CFD. You support it by getting into buying it and holding it, and doing nothing else and just sticking with it. When it comes to traders, however, traders are, let's call them speculators.
Yeah.
So people who are in it for the money. The traders who are in it for the money, really long term, like it's recommended in cryptocurrencies, buy and forget and hold it for 20 years or something. Again, it makes sense to just buy and hold cryptos if they can sort out all the technical stuff and all.
Or if they can afford it.
They can afford it, if they can do it, if they know how to do it, if they can use a Trezor or whatever.
Yeah, you need a ledger and encrypted ledger and all that.
If they can convert the money, there are a lot of obstacles for them. But if they can surpass these obstacles, that's the way to go. If you're a trader, however, and you're interested in buying and selling in intervals like from a day to a month to 2 months to 6 months, something like that, CFDs have advantages that cryptos don't have. First of all the technology.
The leverage, first of all.
Yeah. There is a lot.
Not
of leverage.
anymore in Australia, though.
Yeah, a lot of leverage. This is the first advantage, definitely. Second advantage is you don't have this technological barrier anymore. You don't have to learn how to use ledgers and wallets and everything. You don't have to being paranoid about getting hacked. You don't have to learn about cold storage and hot storage and all this stuff. So you can just deposit money. The broker is regulated. Your funds are segregated in a client's accounts. You're safe and you do whatever you want. Also,
that's from the CFD from the trading point of view.
CFD, right. So it made sense to go for a CFD in that case. Another important advantage of the CFD is that you deposit and you withdraw in fiat. That means no problem with tax authorities, no problem with what am I going to do with my profits with Bitcoin. I don't know, am I declaring them? Am I not declaring them? What's happening? Like no grayness. There's a lot of gray areas.
Yes, and that was so exciting about cryptos if you think about it.
Yeah, sure. But if you really want to, if you're in it just for the money and you want to trade it and you want to do your tax correctly and whatever, CFDs is a very good way to do that. And lastly, CFDs is there are some huge companies, CFD brokers offering CFDs that they are, you know them for years now, 10, 20, 15 years. TopFX has been around for 10 years.
Yeah.
Other brokers have been around for more. So you've traded with them. You know what to expect. You know what's going to happen. You know they're going to deposit, withdraw your funds securely. You know all this stuff. Whereas the unknown of just getting into a new digital world that you have no idea about, it will be quite challenging and frightening for traders. So those kind of traders, I would recommend to stick with CFD. So to recap, you want to trade, you want to speculate, you don't want the technological hassle, you're not sure exactly how cryptocurrencies work and what they are. It's good to stick with CFDs, do your trading, trade a lot of other asset classes at the same time.
Is it a good idea to probably hedge your positions if you're trading?
That's a good point also.
Bitcoin
you can hedge your, that's a great point.
With another asset,
That's a great point that I didn't make actually. You can have holdings in crypto, in real crypto, and you can hedge it with leverage, with CFDs. When you see
that's a great tactic. How you cover your losses, basically.
Of course. You can hedge it like that. If, on the other hand, you want to support cryptocurrencies, if you're a believer and if you want to be part of the digital revolution and everything, there is no way other than getting into the crypto and holding. That's how you're going to back up the revolution. That's how you're going to back up the actual currencies, and that's how you're going to also learn about it. That's how you're going to be part of it. So no other way.
Let me ask you one more thing, because I like the subject and I know you know your stuff. How about mining? I see a lot of people that have more or less idea about cryptocurrencies and stuff, posting on Facebook, posting on social media. Let's mine. You have to mine. Is mining a good thing? I mean,
okay, in order to understand why you have mining, you have to understand what is blockchain.
Sorry, yes.
No, it's okay, but you have to. So,
how would have blockchain been useful with the US elections so we avoid the vote count?
Of course.
There you go.
It would be.
That's the easiest
one
answer.
Of the advantages of a blockchain is that it provides amazing security and amazing tracking of history of anything physical or digital. So, for example, you would have implemented the elections to be part of a blockchain infrastructure, every vote would be completely different from the other, accounted for, know where it started, where it ended, lifetime, everything secure. So there wouldn't be any. Not that I think that there is now the elections are rigged or anything, but
but there are rumors. Foreign agencies getting involved. Russia.
You would not have this.
Exactly.
Because you can use blockchain like that, and that are the advantages of blockchain. That is the main goal of blockchain. Cryptocurrencies are just an application of blockchain. But at the same time, the blockchain only works via cryptocurrencies. And that is one of the reasons why cryptocurrencies are going to go up. Because as the blockchain technology is getting more adopted, and blockchain technology, it can do wonders. It's really like rewriting the internet. I mean,
yes.
When you can solve this problem of security and for understanding the lifetime of every product or thing, you can do like some futuristic stuff, like imagine that you're driving your car and some part of it has some fault or some error, and you automatically have a smart contract being generated. You automatically order the replacement. You check the replacement if it's genuine or if it's not genuine, but it's up to the specifications. You organize at the same time the time that the car is going to go to the shop. All of this happening automatically. All of this happening peer-to-peer. Without anyone in the middle, without any middleman, very low cost. You understand that blockchain is a technology that is going to really reshape everything. So back to your original question, mining. Yeah, back to your original question. Blockchain, when it started, because of the way it works, blockchain is they are databases that are decentralized and they exist in a lot of computers around the world. Okay, that means that in order for the security aspect to work, you need a lot of very difficult calculations to happen and a lot of power to do those calculations and to keep those ledgers. As you probably know, the Bitcoin ledger being kept on every Bitcoin computer is exactly the same. No one has, there is no part of the database in every computer. Everybody has the whole thing.
Yeah.
So
you download the entire thing.
It's a lot of computing power required in order to solve the double spending problem. We're not going to go into that, but we have a lot of technical problems to solve. How are you going to do it? You have to reward the people who invest in providing computer power to the network. And you
So
reward
this is
them.
what a miner is basically. Someone that puts his computer and his electricity to use.
How are you going to make them use their computer if you don't reward them? So you reward them by paying them back in cryptocurrency for mining. And mining, there is no mountain that you go and dig in order to find.
That's what people think.
Yeah, because it's called mining, but it's not really mining. You are actually helping the Bitcoin network or any blockchain network to work. You're supplying computer power, and as a reward, you get part of the coins that are generated.
And can anyone do this?
Anyone can do this, but Bitcoin is, let's talk about Bitcoin specifically. It's made in a way that it gets harder and harder and harder. The more Bitcoins you have in circulation, the harder it is to get more Bitcoins because you need a lot more computing power. So if we go back into 2011, which everybody would love to go back in 2011 and, open his mediocre computer and, mine 100 Bitcoins in a couple of hours, which is what would happen. That would be great. And back then that's how it was. But back then there was no value in Bitcoin. So now you actually, in order to get anything, you need a lot of computing power, and that's why they're building farms that have a lot of computers providing their resources to the network and getting back the Bitcoins. But the bad thing about mining is that it's dependent a lot on the value of Bitcoin, and Bitcoin being so volatile, you have a problem when the price goes down at 5, 6, 4, 3,000 or whatever. Then your investment doesn't make any sense because you're not even making.
You're paying more the electricity than you're paying for that.
So when Bitcoin crashed like some time ago, a lot of mining farms shut down or they couldn't do it anymore. Now that its value is going up again, now it kind of makes sense. I wouldn't suggest to the random average Joe to open his computer and start mining. I mean, it's a good exercise to see how the blockchain works and to understand more about Bitcoins and everything, but it's not going to make you rich. It's not going to make anything. But for someone who is really interested in investing in this and building a farm, etc., you have to put the numbers down. You have to understand where is the point that your investment doesn't make any sense. If you believe that Bitcoin is not going to go there again and just going to keep going up, yeah, it makes sense. But you're taking a lot of risk, especially with your funding.
Can you mine on a very, very weak internet connection?
Sorry, I didn't try that, but I would imagine kind of. But now that the ledger has become quite huge, it's not I would lie if I tell you the exact size of it. But what do you mean by a weak connection? I mean, now
let me tell you why.
Like, it's a 1 megabit connection is a weak connection now.
No, man, let me tell you why. I have a lot of clients and a lot of friends from South Africa, and there is big talks going on in South Africa about mining Bitcoin and stuff like that. And I know there's an internet problem and an electricity problem as well in South Africa. Their internet is not up to the, let's say, EU standards. Can they do something with such a weak internet, or are they just spending money?
I would suggest to everyone and anyone to do something that he has an advantage in. So when you're trying to get into mining, and you know what, my electricity is very high and my internet connection is very bad, and my computers are 10 years old.
Yeah.
It doesn't really make a lot of sense because you're trying to do something that you're starting with a huge disadvantage. So why do it? I'm sure there are other things in South Africa or wherever that make a lot of sense because they have some competitive advantage as compared to other countries. So again, you can see how it is, but if you put the numbers down with weak internet connections and with high electricity bills and with low power computers,
you're going to end up spending more than you make.
It's not going to make a lot of sense. No, I don't
right, I'm with you. Right, lovely insights from you today. Thank you so much for being with us today. Do you have a closing line? What would you say to the viewers? How would you want to close?
I would say that, guys, every trader, you have to understand that it's a very volatile time. Like we said in the beginning, everything is happening at the same time. coronavirus, Brexit, vaccines, elections, Bitcoin and cryptocurrency, so it's alternate asset classes, all the stuff that we discussed here. So volatility is not a bad thing and it's not a good thing. Volatility provides opportunity and it also provides an opportunity to also stop out your account because you don't know what you're doing. So learn about volatility before you start trading, understand how to manage it, do proper risk management, and then you can get and take advantage of the situation at the moment, and try to trade strategies that are good for high volatility, like something that we discussed before. If now it's a time that you're taking your first steps into trading, I would suggest that you wait a little bit and try to learn about volatility and how it works. Or
wait for the markets to calm down.
Cryptos or whatever. Yeah, exactly. Wait for things to calm down a little bit, especially like this next week. It's really rough. So that's the closing statement.
Right. Thank you so much, guys. We had Alex Katsaros, CEO at TopFX, Tier 1 liquidity provider in the FX industry with us today. Alex, thank you ever so much for being with us today. We spoke. This is the longest interview I've done since I've launched InstructFX.
I have a lot of stuff to say. I could go on for hours and hours, but
I'm sure, but we're gonna have a podcast that can be 2 hours long, and then we can talk about
sure.
More
we can teach
game.
people how to trade in that broadcast. We can touch everything, like talk about risk management or whatever you want.
Awesome, guys! Thank you for being with us today. I'll come back tomorrow morning with the European market opening. Who knows? Maybe by tomorrow morning we're gonna have a U.S. president or a new U.S. president. And until then, learn, observe, trade, and remember to trade responsibly. And may all your trades be in the money.
Goodbye.